Monday. What's up, everybody? Monday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody had a phenomenal weekend as we're going to do this day what we do each and every day, looking at our major markets and our stock of the day. If you are a regular returning viewer, do me a favor, hit the thumbs up icon. I'd love to see you give this video a like. If there's a stock that you want me to analyze, put it in the comments down below, and I'll see if we can't analyze those stocks. So make sure you leave a comment down below. It means a lot. Computers appreciate it. And if you come here, you stumbled upon my funny looking face for the first time, hit the subscribe button so that you get the alerts every time we do our videos. So let's go ahead and get started with the big picture. So in the big picture today, we saw last week the markets give us a pretty decent rally up. Everybody except the NASDAQ. Tech stocks are lagging behind. Now, we did see the market give us a rally up, but that rally up that we saw last week was on decreased volume. So it is keeping my spidey sense is still tingling a little bit. Let's go ahead and take a look at the S&P. So looking at the ES right now, we can see that we are about 8 points up this morning, and we're recording this about 6 a.m. Central Time. So we're up about 8 points from Friday's close. The thing I will take a look at very quickly is the spiders. And when I pull up the spiders and I go to a daily chart, I'm just going to take a look at our volume. And what you can see on our volume is that as we're seeing prices rise, we're seeing volume go down. And as we see prices fall, we're seeing volume go up. And now as we're seeing prices rise, we're seeing volume go down. This is typically indicative of a bit of a bearish volume signal. You know, it's a bit more bullish if we're seeing volume go up on the moves up. But we're seeing, and it's not just a little bit of a move up or a move down, it's a tremendous difference. Right, we go from 182 million shares of volume at the peak here on March the 4th down to 64 million on Friday, right? So our volume was essentially cut in 1/3 as we rallied up. We went from 180 million, down to about 64 million. And right now, our last day was actually below our 50-period average volume. So just keep that in mind. It doesn't mean, by the way, that I'm going to change from bullish to bearish. What it means is that I am just keeping my spidey sense. My spidey sense is still tingling, and that's because of the technology stocks. But until then, we're going to continue to stay bullish with our 4-hour upward trend being the direction that it is. So the first and best trade for me today is a breakout above the all-time high. A breakout above the all-time high would be where I anticipate an opportunity to get in. As far as a pullback to a quality area of demand, you know, last night in the overnights, we, right at the London Open, we did get a little pivot where we could see an opportunity at this pivot from last night's London Open. There is a bit of a wick over wick level just above it, so you might even give yourself a little buffer for a potential early entry. In the NASDAQ, so NASDAQ, we looked at a supply level last night and talked about the fact that if we come up into this area of supply, you could get a decent little reversal. And we did get a nice move away from that level into the overnight, and then it dropped until the London market's reversal. So now I'm gonna remove this level since we've hit it, and we're now kind of basing in front of it. And we were basing a bit in front of it last night as well, so it was a little bit more of a risky position. Not one that I think most people are going to take, especially in an overnight session. But if you did, and you got about a 2-to-1, 3-to-1 profit out of there, now you got to say, okay, where's my next level where I can see price moving? Well, until we can get above these highs, the market hasn't proven to me that it's got enough bullishness to kind of continue to go up, and it's a bit sideways. So I would say that your best bet on the NQ, on the NASDAQ, is just to hold off. You may not get a great opportunity in the NASDAQ. If you do want to go bullish, you've got a little 15-minute level here at 12,926 by 12,915. But those would be the areas that I think make the most sense. And certainly today, Herman is doing our live trade room this morning. And so we will take a look, and he will take a look and see what does this look like heading into this morning. Crude oil. So last night we were taking a look at crude oil, and we said we need to see quality basing inside this area for a breakout to occur. We got quality basing, we just didn't get the breakout. we had poked just a minute above there, but really didn't get the quality basing. If you took a breakout on this initial pop, 1, 2, 3, 4, 5, 6 candles later, you hadn't gotten below the prior pivot, which was here, and you're back to break even. And so I think that the breakout is still very much in play above this area here, even though we gave it a little bit of a nuzzle above. I still think it's very much in play. I still think I'm overall a bit more bullish than I am bearish for the short term. For the longer term, I'm definitely bullish. I mean, I still have $70 a barrel oil, is where my thoughts are that we're eventually going to make it to. If you take the breakout, your stop, remember, has to be below the prior pivot just in front of the breakout. Now, we are coming to some areas that is some demand, but it's fairly weak demand. So I wouldn't be surprised to see us potentially break below there. And if you're a bit more aggressive and you want to, you think that we're going to come down today, which I think there's a chance that we will, especially if we base right in there. We actually are putting in a nice little wick over wick 15-minute supply level that was just formed right here. It's just been formed and not yet been retested. So to me, that might actually be a nice little day trade on the return back up into there. That's what I'm going to keep an eye on. So we'll see. By the time this video posts, it may already be either long gone, have already worked, or have violated. So we'll see what happens. And then next is gold. Now, gold last night, I thought, we got a nice doji candle here for a reversal. I said we might get a candle-to-candle shorting opportunity here. We didn't really get a lot of great movement out of that. We're basically right now where we opened. And so in the meantime on this one, our 4-hour trend, we are starting to get a little bit of trying to come out of this, but it's really pretty weak. And so I'd say hold off on this one. There's not a lot of great trading ideas out there for this one either. So just not a lot of phenomenal setups today in our big four. And with that, just maintain caution. Just be cautious. I would also keep an eye on the Russell today, as the Russell has been the market that's let us out the most. And last night we looked at this level here in the Russell. Now, we didn't get an overnight move in the Russell like we did in our other markets. In our last 15 minutes, chart has just come down pretty hard. So let's see if we get a little reversal off of this 15-minute area. But when we're taking a look at this, it's making me hungry to think about the stock of the day. So let's go and take a look at our stock opportunity in our stock of the day. So our stock of the day is Brinker International. Brinker International, more famously known by their number one brand, which is Chili's. Chili's Grill and Bar. Also, they operate Maggiano's Grill and Bar, or Maggiano's Italian Kitchen, whatever the name of that is exactly. I know they've got delicious salads and bread, but there's not enough Maggiano's to go around. I'm just saying, Brinker, how about you open one in my neck of the woods? But anyway, this stock has had a meteoric rise. It's up 1,000% from its lows in the beginning of COVID. It was at $7 a share. It's now trading above 76. So you want to talk about a meteoric rise up. This thing has gone to the moon. And normally you would say, well, that's overextended. Well, when it was basing here and it was up 600%, you'd also say that it was extended, and then it kept going. I really like the fact that we got a fair amount of basing and consolidation through here, and that basing and consolidation does lead to a move up. When I take a look at this on a little bit of a longer scale, and I look, yes, earnings are down, right? We had our earnings are down first quarter year over year from 35 cents to 73 cents to 35 cents. But here's the thing I want to point out that not a lot of people are pointing out. That's a positive number. That's a positive number. That one was a negative number, but that's a positive number. So even in the midst of going all through the pandemic, some people not being able to eat into a restaurant, Brinker was able to maintain was able to maintain positive earnings, not earnings growth by any means, but they were positive. And so where we're seeing restaurants being absolutely annihilated left and right, they were still making money, and they're not generally a gigantic takeout business, but certainly they figured out the takeout side of things. Well, Brinker's headquarters is in Dallas, Texas. They are a Texas-based chain. Most of their restaurants are in are in states that are reopening a lot more liberally. States like Florida, states like Texas. They certainly have a large presence all over the country, but their presence is, Texas and Florida are two of their much bigger states where they've got a lot of presence, and a lot of those states are opening up more significantly. So are some of the states in the Southeast. So I think we could see an accelerated sales and earnings growth in Brinker as the markets tend to open back up, as people tend to go back out. And so I think that long term, Brinker could make it up over 100. We did get a breakout on Friday above this 76.15 region, and I think there's room for it to kind of continue to rise. So keep this one on your radar screen for a more of a monthly income position. Maybe plan on being in this one for a while, as I think it could have some legs on it. And certainly keep your stop tight. I'd say your stop would be below 65. Keep it below this pivot here. But I wouldn't be surprised to see this get a bit higher. Now, some people say, well, it's Chili's. How high can it go? Well, Chipotle Mexican Grill's 1400. Right? Now, I'm not saying that they're the same. They don't operate under the same. I mean, Chipotle Mexican Grill has literally 10 times the earnings per share, especially with a less diluted share pool. But Brinker International does have the legs that I think can get it to over $100 a share stock. So hope you guys are having a great day. As always, if you've got any questions, send us an email, support@tradersarmy.com. Until tomorrow, everybody, I will talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.